Hey traders, this is Ron. Happy Monday. I hope your week is off to a great start. As always, everything in this presentation is for educational purposes only. All right, we're going to kick off here with SPY, and what do you know? The 20-day EMA in red rejected the ETF. Remember on last night's video, I said, hey, this is a positive development, how we could quickly get back above the 50-day. Today, we got even a little bit above the red line, the 20-day EMA. And what happened? Ended up closing the lows of the day. So the 50-day didn't act as a rejection point, but the 20-day did. And we're back below the 50-day. So this is the retest and rejection I was talking about watching last week as we broke down. If we get that rally, let's see what happens. We cleared one hurdle, but not the other. Walking into tomorrow, the charts just went bearish just because of today's action and the fact that we reversed off the highs at a moving average and then finished near the lows of the day. The only caveat or asterisk would be volume sure pulled back. If this would have been a bigger day in volume, something like it was over here 4 trading days ago, back on I think Wednesday that would have been, this would be a much bigger deal. I would have a much more bearish tone as I would talk to you. But volume actually pulled back. So it's not that big of a deal, but it still is a big enough deal for me to say it's technically bearish walking into Tuesday's trade. But please keep in mind, even as I zoom out here, if we come in here, we do drawings, and let's say I want to get that rectangle again, right? I can come in here and I can still do something like this. Even though we got rejected, we're still within the box. Right now, the target is back down to the bottom of the box. The upside target would be up here if we get back above the 20-day. We're a bit range bound here, so it's not a huge range, but where we stand at 293, support's down there, ballpark 285, 284. That's still 70, 80 S&P points. A potential stop out if I wanted to get bearish could be the 20-day EMA, assuming it doesn't reverse and have a massive update, right? That would be a bad thing if you were going to be bearish on the market. But right now, that would be the target. 20-day would be a stop I would consider once we get above the 20-day and back up to the previous highs. If I bring in the diamonds, eerily similar, except the diamonds could not even get above the 20-day EMA, and they closed, guess what? Back below the orange line, back below that institutional moving average. Volume really pulled back today. So if you ask, what's the conviction of this looking bearish walking into Tuesday, and oh my goodness, are we preparing for another plunge? Let's not get ahead of ourselves. The volume pulled back really, a lot, very much. It did not spike higher, which would be more concerning. And again, if I zoom out, just for some context, I come in here, I'm going to hit draw. Oops, here we go. And we do, well, let's try that again. Drawing, rectangle. We come in here, right? I can still do something like this. And just like the S&P, we're in the middle, almost smack dab middle of that box. But again, bearish walking in to Tuesday. Qs, pull back in volume. They did the best today in terms of getting above the 20-day, but they finished just barely back below the 50-day. It's only a few pennies. It's not a big deal, but the same thing happens here. I can draw a box and say, look where we are, smack dab in the middle. So caution walking into Tuesday. Keep in mind, today's the 7th of October. Earnings season kicks off next week. You could argue it starts this week a little bit too, but next week it starts opening up more, and the following week, and as we get deeper into October, maybe this is going to help be a catalyst that we go higher or lower outside of all the tweets and all the nonsense going on in Washington. All right, let's take a look at IWM just really quickly. It was only down at 0.38%, bit of a high wave doji. There's nothing really to read into that because, again, here we are also range bound. If I take a look at gold, GLD, now this is an interesting little, if I was doing an educational class, I would be saying this. While gold did break below the 50-day today, it was down 0.85%, it's over a buck. It pretty much broke the 50-day, not really by price, but it broke it by time. And what I mean by that is it's essentially been going nowhere fast ever since we got into August. Yeah, it was down a little bit today, but we didn't take out 140 and we didn't take out these lows here. So if I was trading GLD from a bullish perspective, would I be concerned today? Yeah, I'd be concerned a little bit because we're below the 50-day, but I think my stop would need to be at 140 or back down here at 138. Or I could split my stops, half the position off here at 140 and then the other half off at 138. Again, as a paper trade, as always. If GLD tomorrow magically gets back above the 20-day again in red, yeah, it goes a little bullish, but like we've been drawing, if I come in here and, we could do a channel, we could just do a trend line. So let's do this. Trend line, you get the idea, right? Then I can come in here, do a drawing, do a trend line. It's not perfect, but you get the idea. We're also still in that downtrending channel. Therefore, I would still be very cautious on GLD on the daily chart. Today wasn't a huge deal because we're only down 0.85%. But really, if we break below 140 and 138, that's where the bears start getting a bigger directional upper hand. All right, here are the banks, XLF. They're also a bit range bound. Support's down here at 26 on the banking ETF. Resistance is up there pretty much almost at 28.75. Right now we're at 27, so we're right in the middle. If we take a look at transports, look at here, it's 175, up here 200. We're still range bound here too. Take a look at Brazil, EWZ. Now this is interesting. Watch the 50-day SMA in orange. We got above it over here a year ago on the big rally. Then we sort of chopped above or below, back and forth. It really didn't work very well, right? But it's funny how these things can work and then they don't work. Look what happened in late March. Once we lost the 50-day, the 50-day's been spot on, going back like, 7-8 months. We stayed below the 50-day. Once we get above, we stayed above. Once we get below, we pretty much stayed below, except that one day here in August. If I zoom in, look how the 50 days been resistance. 1, 2, 3, 4, 5, 6, 7, 8, 9, like 10 days out of September. A third of the month, it acted as resistance. Today was a big down day. So target 39-ish, and then back down to the May lows at 37. Just trying to highlight something on how sometimes moving averages can work and then not. It all depends who's following them. And right now it seems traders are definitely following it. And here is ALLK. It was down at 35 bucks. Then it shoots up to 90. That's a huge move, almost triple, right? But now with today's move, it broke the 50-day. The next technical stop's about 60, which was the gap up point, and then it's all the way back down here. This one looks like it certainly is a massive roller coaster. So if you're watching this one, yeah, get some popcorn. All right, here is Yum. Now Yum is interesting, and I got a question on it because it's really been in a nice uptrend. If you go back to sort of beginning of the year, went from 90, it's now up at 115, almost to 120, but it started to break below the 50-day and volume started to increase. Here you can see it breaking through the 50-day, volume's increasing. It's above its 50-day moving average on volume. And then we started to see some really big volume bars come in. The red bars are down days. But notice what it can't get back above, that orange line. So that's the line in the sand. If I was trading Yum, I would need to get back above the orange to be bullish. Right now, this is still a bear flag. That's all this is. It's not bullish in any sense of the way yet. And last but not least is 3M. It's due to report earnings about another, not quite 3 weeks, 2.5 weeks. But the stock just blew below 50, or closed below 155. It blew through support is what I'm trying to say. I'm going to have to zoom out. Check this out. There is where we are, 153. The next support's down here, multiple layers around 138. And then, holy macaroni. So heads up on this one, maybe earnings is going to be the turnaround story. And if it is, it might make for some interesting potential bullish trade ideas. But volume wasn't huge today, but it still broke support. So bearish on MMM. And the response to Friday's see the top 10 stocks for year end was insane. We had 500 spots. We ended up with over 560 folks registered. So we over-registered. Some folks got locked out. I know some folks can't make it. Some folks didn't show up. We ended up hitting max registration. So here's what I'm going to do. I'm going to do an event this Wednesday, as in 2 days, 7 p.m. Eastern, 4 p.m. Pacific. And then on Friday, the 11th, this Friday at 12 noon Eastern, 9 a.m. Pacific. You can register at the bottom of the video, or if you're receiving this video via email, there'll be links in that email. Please register. If you're going to attend both, that's okay, but otherwise just pick one so somebody else can have that other spot. And when the first 5 minutes are going live, I promise to show you the hottest stocks for the week ahead. This is going to be an example of what you're going to be seeing. I'll be able to show you the percent increase, the stock, the annualized percent, probability of increase, and a whole lot more. And those of you that attend, I get inundated with emails saying how amazing the event was. You need to be there. We're entering one of the best times of the entire trading year. It's now and it's again in January. You do not want to miss these times. But if the market starts running, you need to know who usually has the big money pouring in. And even if the market doesn't rally into year end, which it typically does, if it starts to roll over, we have a list of bearish stocks to watch as well. If these little turkeys are bearish when the market's bullish, what do you think is going to happen if the market's actually bearish, right? So we're going to have bullish, bearish stocks. Go ahead and register ASAP, and I look forward to seeing you guys there. I wish you guys all the very best. Have a great day. See you in the next video.